Question 1. Topic: eligibility and underwriting. Which of the following factors would most likely lead to a higher premium for an individual disability insurance policy? A. The applicant has a history of stable employment in a low-risk office job. B. The applicant is self-employed and reports fluctuating income over the past 3 years. C. The applicant has no pre-existing medical conditions and a clean medical history. D. The applicant has chosen a policy with a long elimination period and a short benefit period. Answer: B. Explanation. Option B correct. Self-employment and fluctuating income introduce higher underwriting risk. Insurers assess the likelihood of claims based on occupational stability and predictability of income. This scenario suggests a higher likelihood of future claims or difficulty in proving income loss. Option A. A low-risk occupation and stable employment generally result in lower premiums as the risk of claim occurrence is reduced. Option C. A clean medical history and no pre-existing conditions lower the underwriting risk, leading to standard or lower premiums. Option D. Policies with longer elimination periods and shorter benefit periods generally have lower premiums because they reduce the insurer's potential payout. Relevant guidelines. Underwriting processes evaluate risk factors such as occupation, income stability, and medical history per New York State disability insurance standards. Question 2. Scenario-based question. Topic: policy provisions and features. Sarah, the 35-year-old graphic designer, recently purchased a disability insurance policy with the following features: benefit period, 5 years elimination period, 90 days own occupation coverage for 2 years, then shift to any occupation coverage 1 year later. Sarah suffers a hand injury that prevents her from working as a graphic designer. However, she is capable of working as a receptionist. After 2 years of receiving benefits, what will likely happen under her policy? Sarah will continue to receive full benefits as she cannot perform her own occupation. B. Sarah will stop receiving benefits as she can perform another occupation. C. Sarah will receive reduced benefits as her policy shifts to any occupation coverage. D. Sarah will receive no benefits because her elimination period exceeds 2 years. Answer: B. Explanation. Option B correct. After 2 years, Sarah's policy shifts from own occupation to any occupation coverage. Since she can perform another occupation, receptionist, her benefits will cease under the any occupation clause. Option A. Full benefits are only available during the initial 2-year own occupation period. After this, the policy evaluates whether Sarah can perform any occupation. Option C. A shift to any occupation coverage does not imply reduced benefits, but rather reevaluation of eligibility based on ability to work in any suitable role. Option D. The elimination period is only 90 days, meaning benefits would have begun long before the policy's 2-year mark. Relevant rules. Policies with own occupation definitions transitioning to any occupation are common, emphasizing the need for detailed understanding of benefit timelines and eligibility criteria under New York regulations. Question 3. Topic: tax implications of disability insurance. Which of the following statements about the taxation of disability insurance premiums and benefits is correct? A. Premiums for employer-sponsored disability insurance are tax-deductible for employees, but benefits are taxable. B. Premiums for individually purchased disability insurance are not tax-deductible and benefits are tax-free. C. Premiums for employer-sponsored disability insurance are not tax-deductible for the employer and benefits are tax-free. D. Premiums for individually purchased disability insurance are tax-deductible but benefits are taxable. Answer: B. Explanation. Option B correct. When an individual purchases a policy with after-tax dollars, premiums are not deductible, but any benefits received are tax-free as the policy was funded with after-tax income. Option A. Employer-sponsored policy premiums paid by the employer are generally not deductible for employees. However, benefits are taxable if the employer pays the premiums pre-tax. Option C. Employers can deduct premiums for group policies as a business expense, but benefits may be taxable to employees. Option D. Individually purchased premiums are not deductible, thus benefits are not taxable. Relevant guidelines. IRS and New York State regulations clarify the tax treatment of disability insurance premiums and benefits, ensuring proper financial planning and compliance. Question 4. Topic: regulatory framework and compliance under New York's Disability Benefits Law (DBL). Which of the following is a requirement for covered employers? A. Providing disability benefits for an employee who becomes disabled due to a non-work-related injury. B. Covering employees for both work-related and non-work-related injuries under the same policy. C. allowing employees to opt out of DBL coverage if they have private insurance. D. Offering disability benefits only to employees who have worked for the company for at least 6 months. Answer A. Explanation. Optionals were correct. The New York Disability Benefits Law mandates that employers provide benefits to employees for non-work-related disabilities. Work-related injuries fall under workers' compensation. Option B. DBL does not cover work-related injuries, which are separately addressed under workers' compensation. Option C. Employees cannot opt out of DBL coverage, as it is a statutory requirement for covered employers. Option D. DBL coverage begins after a short waiting period, often 30 days, not 6 months. Relevant rules. Employers must comply with NYDBL requirements to ensure adequate non-work-related disability coverage for employees. Question 5. Topic: Policy riders and optional benefits. Which policy rider is most appropriate for a policyholder who wants to ensure their disability benefits increase to match inflation? A. Future increase option, FIO rider. B. Cost of living adjustment, COLA rider. C. Catastrophic disability benefit rider. D. Waiver of premium rider. Answer B. Explanation. Option B correct. A COLA rider ensures that disability benefits increase annually to keep pace with inflation, preserving the purchasing power of the benefits. Option A. An FIO rider allows the policyholder to increase their coverage in the future but does not address inflation. Option C. A catastrophic disability benefit rider provides additional benefits in severe disability cases but does not adjust for inflation. Option D. A waiver of premium rider ensures no premiums are required while the insured is disabled but does not affect benefit amounts. Relevant guidelines. Inflation adjustment riders, such as COLA, are critical for long-term disability policies, especially in high cost of living states like New York. Question 6. Scenario-based question. Topic: Claim procedures and management. Michael, a marketing executive, files a disability claim after a car accident leaves him partially paralyzed. His policy includes partial disability benefits and a waiver of premium rider. During the claims investigation, the insurer discovers discrepancies in Michael's income documentation. What should Michael do to resolve the issue? A. Submit additional income documentation to clarify the discrepancies. B. Cancel his claim and apply for SSDI benefits instead. C. File an appeal immediately without addressing the discrepancies. D. Request a legal consultation to bypass the claims investigation process. Answer A. Explanation. Option were correct. Submitting accurate and complete income documentation is critical for resolving claim issues. Insurers require proof of income to assess benefit eligibility. Option B. Cancelling the claim would forfeit potential benefits under his policy. SSDI benefits may also be less comprehensive. Option C. Filing an appeal without addressing discrepancies is unlikely to succeed and may delay the process. Option D. While legal consultation can help, bypassing the investigation is not feasible as insurers must complete due diligence. Relevant rules. Accurate claims documentation is essential under New York disability insurance regulations. Policies with partial disability benefits require income validation to determine compensation. Question 7. Topic: Social Security Disability Insurance (SSDI). What distinguishes Social Security Disability Insurance (SSDI) from private disability insurance? A. SSDI covers temporary disabilities, while private insurance covers long-term disabilities only. B. SSDI benefits are based on work history and contributions, while private insurance benefits are determined by policy terms. C. SSDI benefits are tax-free, while private insurance benefits are always taxable. D. SSDI requires a waiting period of 30 days, while private insurance has no waiting period. Answer B. Explanation. Option B correct. SSDI eligibility and benefits are based on the applicant's work history and Social Security contributions. Private insurance benefits depend on the policy's specific provisions, such as benefit amounts and periods. Option A. SSDI generally covers long-term disabilities and does not provide benefits for short-term or temporary conditions. Option C. SSDI benefits may be taxable based on income, and private insurance benefits can be either taxable or tax-free depending on how premiums were paid. Option D. SSDI has a waiting period of 5 months, not 30 days, and private insurance often includes an elimination period based on policy terms. Relevant guidelines. SSDI and private insurance serve different roles in disability coverage, with SSDI acting as a federal safety net and private policies providing customizable options. Question 8. Topic: Employer-sponsored disability plans. Under New York's disability benefits law, which of the following statements is true about employer-sponsored disability insurance? A. Participation is voluntary for employees unless specified in their contract. B. Premiums are fully paid by the employer without any employee contributions. C. Employers are required to offer coverage for non-work-related injuries or illnesses. D. Benefits are exempt from all taxes for the employee. Answer: C. Explanation. Option C correct. New York's disability benefits law mandates employers provide disability coverage for non-work-related injuries or illnesses. Option A. DBL participation is mandatory for employees of covered employers. Option B. Premiums are often shared between employers and employees, with employers deducting a portion from employee paychecks. Option D. Benefits may be subject to taxes depending on how premiums are paid. Relevant rules. New York's DBL ensures basic income replacement for employees unable to work due to non-work-related conditions. Question 9. Topic: Tax implications of disability insurance. If an employer pays the premiums for a group disability insurance policy, how are the benefits typically taxed when received by the employee? A. Benefits are fully taxable as income to the employee. B. Benefits are partially taxable based on the employer's contribution percentage. C. Benefits are tax-free if the premiums were paid with pre-tax dollars. D. Benefits are tax-free regardless of who paid the premiums. Answer A. Explanation. Optionals are correct. If an employer pays the premiums, benefits received by the employee are considered taxable income. Option B. There is no partial taxation and the benefits are fully taxable if the employer pays the premiums. Option C. Pre-tax premiums lead to taxable benefits, not tax-free. Option D. Benefits are only tax-free if premiums were paid with after-tax dollars. Relevant guidelines. IRS and New York state rules clarify the tax implications of group disability policies, ensuring compliance with income reporting. Question 10. Scenario-based question. Topic: Current trends and emerging issues in disability insurance. Emma, a software engineer, works remotely from her home in New York. She purchases an individual disability insurance policy and declares her occupation as low risk. However, her insurer requests additional information about her work environment. Why might the insurer make this request? A. To verify if her remote work setup increases occupational risk. B. To confirm whether Emma's income exceeds the policy's coverage limit. C. To determine whether her policy should cover work-related injuries. D. To assess if she qualifies for group disability insurance discounts. Answer A. Explanation. Optionals are correct. Insurers evaluate occupational risk based on work environments. Remote work may introduce ergonomic risks or other factors that impact disability claims. Option B. While income verification is part of underwriting, it does not relate to work environment inquiries. Option C. Work-related injuries are generally excluded from individual policies, which focus on non-work-related conditions. Option D. Individual policies do not qualify for group discounts. Relevant trends. Remote work has shifted risk classification, requiring insurers to adapt underwriting practices to modern workplace environments. Question 11. Topic: Eligibility and underwriting. Which of the following is most likely to affect an individual's eligibility for disability insurance coverage in New York? A. The applicant's job duties and their impact on occupational classification. B. The applicant's preference for non-cancelable coverage over guaranteed renewable coverage. C. The applicant's age and gender in relation to the premium calculation. D. The applicant's previous experience with workers' compensation claims. Answer A. Explanation. Optionals correct. Occupational classification plays a critical role in determining eligibility and premium rates. High-risk occupations may face higher premiums or even exclusions in coverage. Option B. While policy choices affect terms, they do not directly impact eligibility. Option C. Age and gender may influence premium rates, but they do not directly determine eligibility. Option D. Workers' compensation history may affect underwriting, but is not a primary factor in eligibility determination. Relevant rules. In New York, underwriting for disability insurance is primarily based on job duties and the associated risks. Question 12. Topic: Policy provisions and features. Which provision in a disability insurance policy ensures that the benefits will not decrease over time due to inflation? A. Future increase option, FIO rider. B. Partial disability benefits provision. C. cost of living adjustment, COLA rider. D. Waiver of premium rider. Answer C. Explanation. Option C correct. The COLA rider adjusts benefits annually to keep pace with inflation, ensuring the policyholder's income replacement keeps its purchasing power. Option A. The FIO rider allows the insured to increase coverage, but it does not adjust benefits based on inflation. Option B. Partial disability benefits provide income for reduced work capacity but are unrelated to inflation adjustments. Option D. The waiver of premium rider allows premiums to be waived during disability but does not affect benefit amounts. Relevant guidelines. Inflation protection riders like COLA are commonly added to long-term disability insurance policies to combat the eroding effects of inflation over time. Question 13, scenario-based question, topic, claim procedures and management. Tom, a construction worker, experiences an injury on the job site that prevents him from working for an extended period. His employer offers workers' compensation, but Tom also has a private disability insurance policy. What should Tom do to ensure he receives full benefits from both insurance policies? A. File a claim with both workers' compensation and his private disability insurer simultaneously. B. Inform his private insurer that he is covered by workers' compensation to avoid claim duplication. C. Cancel the private disability claim and solely rely on workers' compensation benefits. D. Wait until workers' compensation benefits are exhausted before filing a private disability claim. Answer B. Explanation. Option B correct. When a policyholder has multiple forms of disability insurance, it's essential to notify both insurers to ensure proper coordination of benefits. This prevents duplicate payments and ensures that the maximum allowable benefits are received. Option A. Filing both claims without coordination can lead to complications and may result in overpayment or claim denial. Option C. Cancelling the private claim may cause the individual to forego additional benefits not covered by workers' compensation. Option D. Waiting until benefits are exhausted may result in missed coverage during the waiting period. Relevant rules. Coordination of benefits ensures the insured does not receive more than the allowable benefit while still maximizing their coverage. Question 14. Topic: Tax implications of disability insurance. When an employee receives disability benefits from a group disability insurance plan, which of the following is the most likely tax implication? A. The benefits are tax-free if the premiums were paid with post-tax dollars. B. The benefits are fully taxable regardless of how the premiums were paid. C. The benefits are partially taxable depending on whether the premiums were paid by the employer or the employee. D. The benefits are tax-free if the policy is a group plan. Answer C. Explanation. Option C correct. The taxability of disability benefits depends on who paid the premiums. If the employer pays the premiums, the benefits are taxable. If the employee pays the premiums with post-tax dollars, the benefits are generally tax-free. Option A. Tax-free benefits occur only when the employee pays the premiums with after-tax dollars. Option B. Benefits are not always fully taxable if the premiums are employee paid with post-tax money. Option D. The taxability is determined by who pays the premiums, not whether the plan is a group plan. Relevant guidelines. The IRS rules on disability benefits ensure that the taxation aligns with the source of premium payment. Question 15. Topic: Social Security Disability Insurance (SSDI). Which of the following best distinguishes Social Security Disability Insurance (SCI) from private disability insurance in terms of eligibility requirements? The SSDI has more lenient requirements for pre-existing conditions compared to private disability insurance. B. SSDI requires the individual to have worked a specific number of years and paid into Social Security. C. SSDI provides benefits immediately upon diagnosis of a disability, while private insurance has waiting periods. D. SSDI benefits are typically higher than those provided by private disability insurance. Answer B. Explanation. Option B correct. SSDI requires that individuals have worked and contributed to Social Security for a specified period. Private disability insurance eligibility is generally based on underwriting factors and may not require prior work history. Option A. SSDI and private insurance both have restrictions on pre-existing conditions, but SSDI has stricter requirements. Option C. SSDI benefits are typically subject to a 5-month waiting period, whereas private insurance may have various waiting periods depending on the policy terms. Option D. SSDI benefits are often lower than private disability insurance benefits, as SSDI is designed to cover basic living expenses. Relevant rules: SSDI eligibility is work history based, while private disability insurance relies on underwriting criteria such as health status and occupation. Question 16. Topic: Employer-sponsored disability plans. Which of the following is true about employer-sponsored disability insurance in New York? A. Employers are required to offer long-term disability insurance to all full-time employees. B. Employers must provide disability benefits under New York's disability benefits law for employees who are injured off the job. C. Employers can exclude certain employees from disability coverage if they work fewer than 20 hours a week. D. Employers are prohibited from offering more than one disability insurance policy to the same employee. Answer: B. Explanation. Option B correct. New York's disability benefits law mandates that employers provide benefits for non-work-related injuries, including off-the-job injuries. Option A. Employers are only required to offer short-term disability benefits under DBL, not long-term disability coverage. Option C. Employees who work fewer than 20 hours may not be eligible for DBL coverage, but this is determined by state law and employer policy. Option D. Employers can offer more than one policy, including supplementary or voluntary disability insurance. Relevant rules: DBL coverage applies to employees with non-work-related disabilities, ensuring they receive income replacement during disability periods. Question 17. Topic: Coordination of benefits with other insurance plans. If an employee receives benefits from both a private disability insurance policy and Social Security disability insurance (SSDI), which of the following is most likely? A. The total benefits received will exceed the employee's pre-disability earnings due to coordination of benefits. B. SSDI benefits are not counted when determining private disability insurance payments. C. Private disability insurance may reduce its benefits to avoid paying more than the total pre-disability income. D. Private disability insurance benefits will be automatically increased to match the SSDI benefits. Answer: C. Explanation. Option C correct. Coordination of benefits typically ensures that the total disability benefits from both SSDI and private insurance do not exceed the individual's pre-disability earnings. This may result in a reduction of the private policy's benefits. Option A. Coordination of benefits ensures the combined benefits do not exceed pre-disability earnings. Option B. SSDI benefits are typically considered when coordinating private disability benefits to avoid overpayment. Option D. Private insurance benefits are not automatically increased. Instead, they may be reduced. Relevant guidelines: coordination of benefits ensures that individuals do not receive a windfall, aligning benefits with actual pre-disability earnings. Question 18. Topic: Disability insurance marketing and sales. Which of the following best represents an ethical concern for insurance agents when selling disability insurance policies? A. Overemphasizing the benefits of non-cancelable policies without addressing potential exclusions. B. Providing discounts to clients who purchase more than one policy. C. Offering policies that cover both short-term and long-term disabilities without adequate explanation of the policy limits. D. Recommending high coverage limits to clients without considering their financial needs. Answer A. Explanation. Optionals are correct. Ethical marketing requires agents to provide clear and balanced information about the policy's benefits and exclusions. Overemphasizing one aspect, like non-cancelable coverage, could mislead clients. Option B. Offering discounts for bundle policies is not inherently unethical, provided it complies with insurance regulations and the client is informed. Option C. Explaining policy limits and terms is essential. A failure to do so would be unethical, but simply offering comprehensive policies is not a concern. Option D. Recommending excessive coverage without understanding a client's financial needs could lead to overinsurance, an ethical issue but less common than misrepresenting policy terms. Relevant guidelines. Ethical practices in insurance sales include transparency about policy features, exclusions, and ensuring the policy meets the client's actual needs. Question 19. Topic: Exclusions in disability policies. Which of the following is generally excluded from coverage in a private disability insurance policy? A. Disabilities arising from workplace accidents. B. Disabilities resulting from participation in high-risk activities like skydiving. C. Disabilities caused by pre-existing conditions after the exclusion period. D. Disabilities related to mental health conditions. Answer: B. Explanation. Option B correct. Most disability insurance policies exclude coverage for injuries resulting from high-risk activities unless additional riders are purchased. Option A. Workplace accidents are often excluded because they are typically covered under workers' compensation, not private disability insurance. Option C. After the exclusion period, pre-existing conditions are usually covered. Option D. Mental health conditions are covered in many policies, but coverage may be limited by duration or scope. Relevant rules. Exclusions are standard in disability policies to manage risk and ensure affordability, with high-risk activities commonly excluded unless additional premiums are paid. Question 20. Scenario-based question. Topic. Policy features. Jane is a freelance graphic designer who has purchased an own occupation disability insurance policy. She suffers a hand injury that prevents her from designing but allows her to take a teaching job in graphic design. How will her benefits be affected? A. She will lose her benefits entirely since she can work in a related field. B. She will continue to receive full benefits because her specific occupation is covered. C. She will receive partial benefits to account for her new income. D. Her benefits will be adjusted based on the duration of her disability. Answer. B. Explanation. Option B correct. Own occupation policies provide benefits if the insured cannot perform the duties of their specific occupation, regardless of their ability to work in a related field. Option A. This would apply to any occupation policies, not own occupation policies. Option C. Partial benefits would apply only if the policy included a residual benefits rider. Option D. Benefit adjustments are not based on the duration of the disability but on the policy terms. Relevant rules. Own occupation policies are designed to protect the insured's ability to work in their chosen profession. Question 21. Topic. Benefit limits and waiting periods. Which of the following statements about waiting periods in disability insurance policies is correct? A. Waiting periods apply only to short-term disability policies. B. A longer waiting period generally results in higher premiums. C. Waiting periods are the time between the onset of disability and the start of benefit payments. D. Waiting periods can be waived for disabilities caused by workplace injuries. Answer. C. Explanation. Option C correct. The waiting period, also known as the elimination period, is the time between the onset of disability and when benefit payments begin. Option A. Waiting periods apply to both short-term and long-term policies. Option B. Longer waiting periods typically result in low premiums because the insurer has less exposure. Option D. Workplace injuries are usually covered by workers' compensation, not private disability policies, so waiting periods are not typically waived. Relevant guidelines. Understanding the waiting period helps insured individuals plan for potential income gaps. Question 22. Topic. Non-cancelable versus guaranteed renewable policies. Which key feature differentiates a non-cancelable disability insurance policy from a guaranteed renewable policy? A. Premium rates for a guaranteed renewable policy cannot be increased for any reason. B. Non-cancelable policies allow the insurer to modify benefits after the policy is issued. C. Guaranteed renewable policies ensure continued coverage but may adjust premiums for an entire class of policyholders. D. Non-cancelable policies do not guarantee coverage continuation if premiums are not paid. Answer. C. Explanation. Option C correct. Guaranteed renewable policies ensure coverage renewal but allow for premium adjustments for an entire class of policyholders. Non-cancelable policies lock in both coverage and premiums. Option A. This applies to non-cancelable policies, not guaranteed renewable ones. Option B. Benefits in non-cancelable policies cannot be modified once issued. Option D. Coverage under any policy requires premiums to be paid. Relevant rules. Non-cancelable policies provide maximum stability, making them suitable for individuals seeking predictable premiums. Question 23. Topic. Rehabilitation benefits. Which of the following is a primary purpose of rehabilitation benefits in disability insurance policies? A. To provide additional income during the recovery period. B. To pay for medical expenses related to the disability. C. To support the insured's return to gainful employment. D. To eliminate the need for other types of insurance coverage. Answer. C. Explanation. Option C correct. Rehabilitation benefits are designed to help the insured return to work through vocational training, therapy, or other services. Option A. Rehabilitation benefits are not intended as supplemental income. Option B. Medical expenses are typically covered by health insurance, not disability insurance. Option D. Rehabilitation benefits are an additional feature, not a replacement for other coverage types. Relevant guidelines. Rehabilitation benefits align with the goal of disability insurance, restoring the insured's ability to earn an income. Question 24. Topic: Coordination of benefits. Which of the following best describes the coordination of benefits clause in a disability insurance policy? A. It allows multiple policies to pay full benefits independently. B. It ensures the insured receives total benefits equal to their pre-disability income. C. It prevents overinsurance by reducing benefits if other sources of income exist. D. It mandates that disability benefits are secondary to Social Security benefits. Answer: C. Explanation. Option C correct. Coordination of benefits ensures that the insured does not receive more than their pre-disability income, avoiding overinsurance. Option A. Policies do not pay independently. Coordination rules allocate responsibility between them. Option B. Total benefits are usually less than pre-disability income, incentivizing return to work. Option D. While Social Security benefits are considered, this is not the primary purpose of coordination clauses. Relevant rules. Coordination of benefits is critical for ensuring fairness and preventing fraudulent claims under multiple policies. Question 25. Topic: Tax implications. Which statement about the tax treatment of disability insurance benefits is correct? A. Benefits from individual policies are always tax-free. B. Benefits from employer-sponsored policies are tax-free if premiums are paid by the employer. C. Benefits are taxable if the premiums were paid with pre-tax dollars. D. All disability benefits are subject to federal income tax. Answer: C. Explanation. Option C correct. If premiums are paid with pre-tax dollars, benefits are taxable because the income was not previously taxed. Option A. Benefits from individual policies are tax-free only if premiums are paid with after-tax dollars. Option B. Benefits are taxable if the employer pays premiums. Option D. Only benefits derived from pre-tax contributions or employer payments are taxable. Relevant guidelines. IRS rules specify the tax treatment of benefits based on how premiums were funded. Question 26. Scenario-based question. Topic: Pre-existing conditions. Sarah recently purchased a disability insurance policy. 3 months after the policy's effective date, she was diagnosed with a condition that her medical records show was treated a year before purchasing the policy. The policy specifies a 6-month exclusion for pre-existing conditions. What should Sarah expect? A. The claim will be denied because of the pre-existing condition clause. B. The claim will be approved because the condition is unrelated to her occupation. C. The claim will be approved after the 6-month exclusion period ends. D. The claim will be denied because the condition occurred during the policy's contestability period. Answer A. Explanation. Option was all correct. Pre-existing condition clauses exclude coverage for conditions treated or diagnosed within a specified period before policy issuance. Option B. Whether the condition is related to her occupation is irrelevant to the pre-existing condition clause. Option C. The exclusion applies only to conditions arising after the effective date. Option D. Contestability concerns material misstatements, not pre-existing conditions. Relevant rules. New York insurance regulations emphasize transparency about pre-existing condition clauses to ensure fair underwriting practices. Question 27. Topic: Partial disability benefits. Which of the following best describes partial disability benefits? A. They provide full benefits for a limited time during recovery. B. It compensate for the loss of income when the insured is unable to work at full capacity. C. They cover medical expenses related to a partial disability. D. They apply only when the insured switches to a less physically demanding occupation. Answer: B. Explanation. Option B correct. Partial disability benefits are designed to replace lost income when the insured can work but at reduced capacity. Option A. Full benefits are not typically provided unless the policy specifies a recovery benefit. Option C. Medical expenses are usually covered by health insurance, not disability policies. Option D. The benefit applies regardless of the insured's new occupation, provided they meet the policy's definition of partial disability. Relevant guidelines. Partial disability benefits address the financial impact of reduced earning capacity. Question 20. Topic: Future increase option. FIO rider. What is the primary advantage of a future increase option? FIO rider. A. It allows the insured to increase benefits without evidence of insurability. B. It guarantees cost of living adjustments to benefits. C. It extends the benefit period for long-term disabilities. D. It waives premiums during periods of disability. Answer A. Explanation. Optionals are correct. FIO riders enable the insured to increase benefits without undergoing additional underwriting, which is valuable if their income grows. Option B. This describes a cost of living adjustment COLA rider, not an FIO rider. Option C. Extending benefit periods is not the purpose of an FIO rider. Option D. Waiver of premiums is a separate rider. Relevant rules. FIO riders provide flexibility for policyholders to align coverage with income growth. Question 29. Topic: Claim denials and appeals. Which action is most appropriate if an insured's disability claim is denied? A. File a new claim with the insurer. B. Submit an appeal with additional documentation. C. Initiate a lawsuit against the insurer immediately. D. Contact the state insurance commissioner for immediate intervention. Answer B. Explanation. Option B. Correct. Appeals allow the insured to address the insurer's concerns and provide additional evidence to support their claim. Option A. Filing a new claim would likely result in another denial unless circumstances change. Option C. Lawsuits are a last resort after exhausting administrative remedies. Option D. The insurance commissioner may assist but does not replace the appeals process. Relevant guidelines. New York law requires insurers to provide clear processes for appeals and timelines for resolution. Question 30. Topic: Occupational risk classes. Why do occupational risk classifications affect disability insurance premiums? A. High-risk occupations are excluded from coverage entirely. B. High-risk occupations are subject to stricter underwriting but do not impact premiums. C. High-risk occupations increase the likelihood of claims leading to higher premiums. D. Occupational risk does not influence premium rates in most policies. Answer C. Explanation. Option C. Correct. Higher occupational risk increases the likelihood of claims, justifying higher premiums to account for increased insurer liability. Option A. Most high-risk occupations can be insured but at higher costs. Option B. Stricter underwriting is common but also impacts premiums. Option D. Occupational risk is a significant factor in premium calculations. Relevant rules. New York insurance regulations require accurate risk classification to ensure fairness in pricing.